Whenever we come up with a new strategy, modify an existing one, develop or purchase a complete trading system, we're going to need some objective means of observing its behavior and evaluating its potential for use or for further development. Backtesting is the vehicle we use to accomplish these tasks. We test a system's behavior by observing its results as it steps through the historical data of the currency pairs or markets of interest. By doing so, we can gain insights into how well the system is functioning as a whole, as well as the system's individual components and how those are working as well. Thus, we can see where the system is strong and where the system is weak. For example, let's say you recently purchased an EA and you want to find out how changing the initial stop loss or profit targets affects the overall performance. You can test the various settings to see their effects on profits, win-loss ratios, drawdowns, numbers of trades, the size of the average win versus the size of the average loss, and so on. However, backtesting only works if the rules for the strategy and system are completely quantifiable. The rules for entry, trade management, and exit, as well as those for money management, must be clear and unambiguous. In other words, there should be very little in the system's trading criteria that requires or even allows user discretion. This is particularly true for automated EAs. For example, some leeway can be allowed for initial stop loss and profit target placement. However, all entry and exit signals must be taken without exception, and all trade management rules active during a trade must be followed to the letter. So if 10 traders use the same system on the same broker's platform and employ identical settings, they should all obtain very similar results. On the other hand, if users are allowed discretion where to move stop losses during a trade or change the profit target or alter any other trade management function, then the 10 traders using the same system can end up with very different results. Again, this is really true for automated EAs, so it's really important to hold true to the mechanical rules of backtesting no matter what. There's really nothing magical about the backtesting process. On the contrary, it requires discipline to conduct good, solid backtesting. It's no surprise that many traders lack discipline in this area because backtesting can be tedious and time-consuming. Still, if it's done properly, it provides a great deal of very useful information.